Dear Jochen, thank you for answering my invitation and for agreeing to do this podcast in the series of podcasts that we're trying to do under the Fintech Horizon 2020 project that we are jointly part of the team. So I would like us to dive today in the explainable AI topic. And you have a paper, a research paper. Actually, you have several research papers, and you also have created a use case in our project on this topic. And I would kindly ask you to elaborate a little bit to give us more details. What's the main idea of the paper? What are the main findings? How have you inserted everything in the use case?
Yeah, thanks, Vasile. Thanks for having me. Actually, yes, we had some papers in this project, but it was always different teams, right? So it's not only my own work, but I kind of elaborate like a thread of a series of papers, because in the beginning of our what are the inhibitors of scaling AI across Europe? What could be improved so startups and incumbents and banks could use AI on a broader scale? And what was quite obvious when we studied the material also by supervisors was that explainable AI is really important, because black box AI models, it could be kind of dangerous. You really don't know what's going on inside. There could be a model drift, there could be a bias, there could be unfair treatment of customers. So you really want to know as a bank or as a fintech what's going on inside your artificial intelligence model. And about 2-3 years ago, I think there was this topic, so-called explainable AI. Some people just call it interpretable machine learning. Whatever you name it, it's basically about using AI ML and trying to explain what is the driving features, what is the underlying mechanics of a machine learning model. So very often used in a post hoc modeling approach, where you have a trained model and then you try to come up with additional information about how this model works. And yeah, it's a really cool concept, and it really, the financial industry and also research really picked up on this topic. It's older, actually. It was kind of driven by DARPA a couple of years ago, but since 2018, 2019, it really, you really will find a lot of conferences and a lot of papers about this. So we were kind of inspired, sorry. We were inspired by the Bank of England work on an example in credit risk assessment, where there was used the so-called SHAP or Shapley theory, which is like it's rooted in cooperative game theory, and it tells you basically what is the most important variable behind a machine learning decision on a local basis. So for each record, for each customer in a portfolio, but also on a global scale. And we thought in our EU project, how can we elaborate on this? What can we do when we have these Shapley values? Can we further explore them? Can we better analyze them? And so we came up with an approach where we clustered and network analyzed these Shapley values to look for groups of customers, of groups of people having the same decision making in this model, and really understand better why this model did this and which group is affected and what is the ratio or the decision making mechanics behind it. So for some clusters, looking at some customers, what is the underlying variables there?
Thank you for details, Jochen. It sounds very interesting, as I've seen several of your presentations. And I would go next and ask you, because it seems that providing this type of insights would be very useful in practice for different stakeholders. So for companies using this type of models, also for regulators or supervisors. And I would ask you what was the opinion of these stakeholders when you've presented? Because I know that you've presented the use case and you've made different presentations on the topic in several events. So what were the main opinions, their questions? So how do the practitioners see this, and what have they identified as needs?
Yeah, we had a lot of activity in this project with several teams where we basically traveled to all these local and European level supervisors like European Central Bank, EIOPA, ESMA, EBA, but also to the national central banks like Bundesbank, Banque de France, and so on. And also we extended this workshop tour basically to the industry. So we had many discussions and presentations about this approach with the financial industry, large banks across Europe, from north to south, east to west, and basically discussing the implications of this paper and what is the positive part about it. Could it be improved? And the feedback we received is that Shapley value is really a very important tool in the explainable AI space, because there are many techniques you can use, and it's just one of them. The good thing about it, it has this economic theory. It's rooted in an economic theory, and it gives you interpretable results. You can further process them with clustering and network analysis, as we saw in our paper. So, but we also found out that, I mean, it's just one aspect of this. If you really want to explain and analyze a machine learning model, you need many techniques, many processes around this, many steps. So Shapley value can only be just one part of the puzzle when you really analyze models, but it's really a useful puzzle part, I think.
Okay, and it's your ending. It's perfect for what I plan to ask you further. Is what are the evolutions that you see in the future? So what would your research focus on in this field, and what have you seen as needs from fintechs, from banks, from regulators, and also meeting other researchers? So where will this train go next?
Yeah, this is just the beginning of a larger movement, I think. And this movement could be called a new industry that evolves, also a new research, which is really focusing on the broader technology of trust, I would call it. So what kind of algorithms or steps could be done with technology to create more trust in AI models? Uh, Also, part of this development is something called algo auditing. So it's an auditing, a checking, and an evaluation of algorithms. So we will see more rating of algorithms, we will see more standardization, certification, and we will see more of these trust technologies. For example, you could use AI to generate synthetic data to stress and challenge AI models. So this is another step beside explainability. You could look for, of course, fairness, privacy issues, bias, all these tools we know, and they can be further elaborated, and these evolve. You can also use something like multi-objective optimization, where you take a machine learning model and try to achieve many objectives, and not only accuracy, but also looking at fairness, model driftings, and many more compliance-related issues. So AI governance, AI auditing, uh, creating of trust technologies, all this is a larger development that we currently see, and many parties are involved here. So it's not only it's research, it's universities, but it's also startups, it's software companies, tech companies, but it's also, of course, the innovation departments in banks and insurance companies. And also the supervisor takes closer look, because In the end, when supervisory authorities want to use more data or big data approaches and AI in their supervisory mandate, they also need AI models which need to be trustworthy, responsible, explainable. So it applies to them too. So the supervisory technology area will also increase, and there will be emerging industry around this. At the moment, I think US is a little bit ahead of us with a richer ecosystem, but Europe is really close because we have excellent research over here too. So there will be a lot of exciting things happening in the next, let's say, the next 1.5 years, I guess.
Okay, and I would like to connect to something that you said earlier, right now, in your last explanation. And how far do you see is the research done in academia, so in universities, and the research or the needs of the stakeholders, so of the companies, of the fintechs, regulators, and all stakeholders that you've mentioned? Do you see that there's a gap between them, or are they really close and the research could lead to innovation very fast? Or are we here, at least in Europe, a little bit drifting away one and the other? Or are we close? So
Mhm.
what's your take on this?
Yeah, I mean, basic research is always something that has to be done. It should be continued, and we have really big achievements here. And because it's really like a new area for all of us. But also the practical part of this is important. For example, last year we started roundtables regularly at the Frankfurt Institute of Risk Management and Regulation. That's basically the participants are really like chief risk officers of German banks, but also from other banks across Europe, and discussing the practical implementations or implications, basically. And what's really missing at the moment is, so there's a big gap, right, between the research and, proof of concept, testing these models and looking at all these trust technologies, and on the other side to really bring this into production, like ML ops, DevOps. So really have an approach for big data and like huge amount of data, and also how does it work in production? Is it still scaling, or how do you detect model drift in real time? When do you need to retrain your model? How do you identify if something changes, if you have different explanatory variables? So this is really something we have to work on, because we need more of these models being used in the industry, and then the problems will come up, like AI incidents we have seen, right? And so how can we take care of these? And the answer will be twofold, I guess. On the one hand side, it will be organizing principles, processes, best practices. On the other side, it will be technology. It will be like trust technology, algorithmic auditing. It will also be a joint effort. It will be like an ecosystem that has to emerge around this, where supervisors, banks, and the tech companies and startups somehow better collaborate, like a sandbox environment, right? Where you can have an agile approach to this and rapidly test new models with real data or synthetically generated data if you don't have them, and really learn a lot of lessons and practice and train and get more knowledge about these new trust technologies and the algorithmic auditing. And also the research will see that there's which area to go. They will learn probably what is more relevant, what is less relevant. So basically everyone will profit from the lessons learned, bringing more AI models to production. So we have to be very quick on this, and the production readiness is really critical, I think.
So thank you very much, Jochen, for all these insights and for sharing with me and with our viewers that I hope will listen and watch this short podcast. And I would definitely like to continue this, and maybe we can create some more in the future and go deeper into some topics and because as you've mentioned, I see that there's a lot to be done in the future. There's a lot of opportunities, and hopefully this entire environment that you speak of will start to emerge and will become more and more vivid and dynamic. So thank you very much again. And let's watch this together when we post it online.
Yeah, thanks, Vasile. Looking forward to the next session, and to your questions. Was a pleasure. And yeah, let's keep in touch.
Okay, bye.